This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless8Trading Frank. It's exactly 8:30 p.m. on a chilly and rainy evening here on the East Coast, on the Jersey City waterfront overlooking New York City. It is December 1st, believe it or not, 2019, the last stretch of the calendar year, and hopefully it'll be a very profitable one for us. And as it has been for the past year, uh, this session will be recorded, uploaded to the Google YouTube channel, Clueless8Trading, where for viewing by all other members, as well as anyone out there with the internet connection who would like to find some very valuable information about market forecasts, individual stocks, and such, and the overall dynamics of the U.S. financial markets. On that note, full disclosure, this is purely for financial education and not for any solicitation or advice. So we shall begin. So let me just clear out the screens in the back. Futures are looking terrific as forecasted, my favorite term, up roughly about 9 points, 9 handles, and we're in the right direction. And let's start. Let's put these out. 1 and 2. Okay, great. What we have behind us, as we always do, is a very precise roadmap of the overall markets in the form of live E-mini futures. We have a few very active futures traders in our midst, in our group, and of course we use them as a proxy for the general directional bias of the US stock markets. And anyone who follows these on a regular basis on the real-time Twitter feed has a much, what should I say, lesser painful time than people who are just chasing prices up and down. These are very precise roadmaps which tell you where the markets can fall to, where they can bounce from, and where and everyone out there, especially newer members like Mark here, will need to get used to them. They're not difficult to read, and I provide some very valuable complimentary sessions for newer members to guide them to understand these structures so they do not make emotional mistakes. The mission statement of Clueless8Trading, as you know, is tactical, not emotional. We just don't say that lightly. We mean it. We practice it. We want to be robotic traders to a degree that the intraday, intra-hour, intra-week volatility created by, in my opinion, manipulative algorithmic high-frequency trading programs do not deter us from where we need to go. We are in a bull market. Bull markets just don't end in a whimper. They end with euphoria from a sentiment standpoint. There is absolutely no euphoria. We are reaching 28,000 plus. We're over 28,000 on the Dow Jones Industrial Average. Yet from institutional managers, hedge funds, mutual funds, and of course individual traders, what we call retail emotional traders, RET, have not at all, in most cases, made any money. Or if they have, they've given a good bunch back to the market, and net, they're not really moving forward to the degree they should be. Nobody is playing offense. Everybody's playing defense. We have been bullish on the markets. Have we reached our potential? No. I've said that in multiple webinars, strategic webinars on my Google YouTube channel. We are far from reaching our potential of what we should be doing. And that leaves a big room of almost $6.1 trillion in cash on the side in the United States of America alone, which has not even budged and sitting on either fixed income or cash and not even have come into the markets. I have seen this happen over and over again since I started my career on Wall Street back in 1996. And I saw this happen in 1998. I saw it happen many, many times. I'm a firm believer of the fact that markets peak when people get too comfortable. Nobody is comfortable. I am not comfortable, but then I never get comfortable to start with. So keep those things in mind. Those are what we call WOW, wow, words of wisdom. Learn from years of experience. Okay? So if anybody tells you that, oh my God, the bull market's going to end tomorrow Now, next month, it just won't happen. Yes, we'll have corrections, large corrections, which will encompass anywhere from 400, 600, 1,000, 2,000 points. We have seen those before. We have certainly seen them. We saw it this year. We saw it last year. And those will happen. But the overall trend of the bull market has not changed one bit. And that can be depicted in the form of structured, and I mean structured, things that I structure here for my members to take advantage of or understand what the big picture is. Let's say, for example, the monthly chart. Look at this monthly chart. Does this look like a bear market to you? Yet all the time that you turn on the TV, from the financial media, from all sides, CNBC, MSNBC, Fox News Network, Bloomberg, everybody's always talking about what can go wrong. For once, try to think what can go right. And things have been going very right. Yet, very few have taken advantage of that. And as long as you accept that fact, you're still going to make money going forward. Being dogmatic, I'm certainly not a dogmatic bull, but I respect what my charts are showing. But if you're dogmatic and you let your emotions, whether it's be political or economic, or your overall bias on the world economy, your overall bias on life, you're never going to make real money as a trader. Yes, you're going to make a little money here and there. Facebook goes up $3. Yeah, options went up 60%. Great. But what about the real money, where your actual net worth goes up by 60%? So think about that, okay? So let us begin. A couple of great things happened over the weekend. Number one, we're alive. No kidding, right? Thank God for every single moment that you're breathing. I do, and I'm sure many of you do too. Number two, Thanksgiving sales, which is the driving force of the US economy. Consumer spending is more than 70% of the US GDP. Went berserk, especially on the online side. Okay? Something like $8 billion, $7.4 billion. And for newer members and free trial subscribers like Mark, you have to be connected. You have to be connected. I'm not saying 24/7, but still. On my Twitter feed, I put out some very valuable pieces of information out there, aside from trade alerts and charts, things like that. It's also important news that's going to affect your trading going forward. So I did put out the number out there when I saw on online sales, and wow, what a number. What a number. Okay? American consumer is happy. US economy is doing well, despite all the storms that hit us. The US-China trade war, which is at least the phase one deal, is going to be signed very shortly, is still a big overhang on the global economy and the US economy and the Chinese economy for sure. But still, chugs along. Just look at this chart. This is a monthly chart of the market since the ultimate depth of 666 on the S&P 500 on March 9, 2009. Why do I remember the dates? Because I was on Wall Street, sitting there. I left Wall Street in end of 2010. Okay, so I know very well where the market bottomed. And you can see this. This is not a bear market. The market wants to go higher. Of course, if certain levels are breached, anyone can read this. Okay, if certain levels are breached, for example, 2832, we're going to come down and retest this rising channel at around 2600. But we'll see. We'll cross that bridge before we get there. We're not going to sit here and predict we're going to go to the bottom of the channel. Okay, number three. If anyone who's been following my Twitter feed over the weekend, you know, China's economic picture brightened. Chinese PMI, Purchasing Managers Index, and the Services Index went up sharply, well above 51. That's great. Okay? And regardless of all the negativity that the phase one US-China deal is not going to be signed, blah, 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 it gets almost tiring to hear the same old negative vibes coming out of the media and so-called analysts from my old home on Wall Street. Like, oh, they're not going to sign it. It doesn't mean anything. Well, who cares? Because whether or not it has depth or not doesn't matter. They just need to get that sign. And then talk about the phase two deal whenever that comes. All right, that's just the way life works. There is no perfection. In the meantime, we make money. So I wanted to show you the bigger picture first, and this is a very, very powerful as technical traders, which I predicted months ago. Shouldn't put that in red. I should put that in there. Okay, this is a ascending triangle, and we broke out above it with a vengeance on the week of November 1st. A month ago. Now, yes, we're going to get sharp intraday volatility. Boeing's going to be down 6 because somebody's, pissing on it, or Apple's, some analyst comes out, I highlight the word analyst, comes out and says, oh, Apple thinks they're going to be that. In the meantime, Apple's almost at 270, and we're making money on it. Apple's going to go to 280. We're going to show the chart today. Now, it's not going to happen in a straight line. There's going to be zigzag back and forth, and that's where trade management comes in, and that's what trading charts comes in. We're not in the business of trading prices, ladies and gentlemen. And my regular members know that very well. We're in the business of trading charts. You want to keep on chasing prices up and down, you're not going to go anywhere, because the machines are a million times faster than you are, and they're going to create volatility just to get you out of the position. So put that through your head. So this ascending triangle breakout has to be respected. Where did we break out at? We broke out at roughly around 30.30 on the E-minis, approximately around there on the S&P 500. We'll go with that for now. Okay, 30.30. SPX is at 31.40 at the close on Friday, and slightly higher right now by 8 points. So I'm not saying we're going to go to 3,600 right away, but I wouldn't be surprised one bit if we are there by the end of December. I mean, that's a little bit too bullish if you ask me on a monthly basis, but I think we can get to about 3,200 pretty easily. That's 60 handles from here. 60 times 8 is 480 points on the Dow. I think we can get that. Okay? 480 points, 400 to 500 points in the Dow. I think we get that in December. And this level here, which is, in my opinion, a multi-decade top on the bull market, is where the market will finally say, hey, it's time to ease back a little bit. It doesn't change the long-term bull market, but this level here, which is around 3,700 on the S&P 500, can be had by sometime next year. So that's roughly about 500 or 600 points from where we are right now. So 600 points times 8, that's another 5,000 points on the Dow, which brings it to 33,000 Dow. Now, those are big pictures. I'm not even going there. We're traders. We want to make money, but I'm just showing you what the big picture is. So far, so good. There is not one single thing in here which is negative. These were negative. This is when the market was in danger of breaking below the 2161 level and coming down more. And if you listen to my old videos, we looked at it very carefully and we played it like a fine violin, like a Stradivarius. Okay? And you know that. Please look up the dates and listen to my videos, what I said. But it was scary times from a long perspective. So we kept our trade position smaller, we moved faster, and we let the markets kind of dictate, but more importantly, our predictive analytics dictate whether or not we're going to turn in the month of January 2019 and what would happen. And this is where we are right now. Okay. This is your short-term chart on the market. And the 15-minute, this is what happened on Friday. And I don't want to keep on repeating the same old stuff. You have to listen to my old videos, people who haven't listened to it, and go from there. Short-term charts are always volatile, always. And it is your job to figure out how to read these charts and I'm certainly here to help. And a lot of money has been made and is being made if you follow these roadmaps. You do not need to be a rocket scientist. There are people here who never traded individual charts who are listening right here, not naming any, who have learned from what we do and have managed their trades 100 times better and made 100 times more profits than they ever did in their lifetime. We don't panic. We stay calm and we see what levels we can fall to. Everything is marked. And we try to predict what will happen before it happens. That's the key function of what we do. Okay, so things are fine. Things are just fine. Now, once we get up here, and this, and I'm sure one of you will be able to answer that. What was this big sharp drop the day on the after the market closed on the day before Thanksgiving? What was this? Where futures dropped very sharply in about 5 minutes on eve of Thanksgiving Eve on the 27th. Please, somebody answer me. What was that? I'm waiting for an answer for somebody. What was this big red candle at approximately 5 p.m. on November 27th? Yes, so Paul just wrote. Thank you. And all of you should know that in the back of your head. The Hong Kong bill was signed by President Trump, the one that was floated by Marco Rubio, a very harsh denunciation and strong regulations, carries a lot of weight, and President Trump was forced to sign it. I know that. He wouldn't have signed it. And futures dropped 10 points. Like I said on my Twitter feed at 11 a.m. on Friday, that I was pleasantly surprised to see how the markets reacted to that and basically picked up and went with it. And now we're going to basically go back to where President Trump signed the Hong Kong bill. So I was very pleasantly surprised, and we did pretty decently on Friday. And this is where we are right now, with futures up 9 points. So the charts tell the whole story, not your mind, not what you think. It's the charts. I have nothing more to say. Any questions on the overall market direction for now? Which I'm going to show you one more, which is the hourly. Beautiful. This is more of the swing chart. This is the hourly chart, still pointing towards 3,200. Ladies and gentlemen, anything about this chart that scares the living daylight out of you, aside from the intermittent intraday volatility that we have to deal with? Any of you? Mark, Mike, Paul, Jody?
No.
So just from a calm standpoint, there's nothing here from a technical perspective, ladies and gentlemen, that scares me. What bothers me is when we get the sudden sharp drawdowns in the middle of the day because of a news flash, positions going upside down. but we are nicely diversified. We have great biotechs. We got 2 major buyouts in the past 2 weeks, ladies and gentlemen. We got a Tiffany buyout and we got a medicines company buyout. Both paid the bills. Medicines company paid it big time. And we've been long the stock from a while ago. And we're going to get 2 more buyouts, in my opinion, very soon. And if you go through my Twitter feed, you'll know exactly what they are because I write buyout play. We're going to get 4 more buyouts, in my opinion. All you have to do is have the patience to sit on them. Log me in. ABMD, KRTX, MYOV, Guidant Health, which had a terrific write-up on Seeking Alpha this weekend. No, on CNBC. Should put that out. They said this is one of the best companies ever. GH. Most people don't even know what it is. My members do. Teledoc. ALNY. Some of them are widely traded across the board by retail traders on StockTwits and other forums. Some of them they don't even talk about, which is the ones I like most, actually. Okay? So, the roadmap is right there. Each of these lines weren't drawn for visual gratification. They're drawn because that's how it works. That's what the markets do. All right? Breakouts, blah, blah, blah. This obviously goes back a bit. That's why it's a little bit squished. It goes all the way back to the lows of October 3rd, 2019. A nice uptrending channel, which is intact unless we break 3107. That's 50 points, roughly 50 points where we are right now. 50 points times 8, that means 400 points on the Dow. We are in danger of breaking the uptrend channel that has been ongoing since October of 2019. Not that you'll ever hear these type of precision numbers from anybody out there on the financial media, and maybe not from other services who generally tend to be more reactive. You know that old saying, and it is old, I mean it, and in my words, in my opinion, useless. Trade what you see. Well, like they say in New York, dude, by the time you see it, it's gone. You have to have some level of predictive analytics in order to make real money. You cannot just react to things because the reaction time is way too fast these days. And I'm a very fast trader in some trades. I have 14 screens looking at me and the fastest broadband that I can deal with. And I can't even react to some of the things. I don't want to. So how would you guys do it? So you can't always trade what you see. You have to trade what might happen. And these charts are very clear on that. Very clear on that. Any questions there, Mr. Mark Saloff? I think I'm saying your name right. Saloff? Mark?
Yeah, that's right. Is
Okay.
the
Any questions? Please feel free to ask me. You have your mic on. I'm here to answer. Go ahead.
the bottom, the graph at the bottom, the stock?
Okay, the graph at the bottom, and this is why you need to listen to the new member introductory videos, which are some terrific learning tools on the Google thing, on my Google channel. Go into the new member intro videos, and the other one is called new member intro videos. I explain how to read my charts in excruciating detail. The bottom of the graph is really the internals. As I explained, this is the external. This is what your body looks like when you go to the doctor and he says if you're sick. And I've explained those on my videos, training videos. The internal is what your blood work comes in. What is internal? What's happening inside your body, not external. This is one of the easiest ones to follow, which is the stochastics, which is a derivative of the relative strength index. So the stochastics tell you when they get overbought, oversold, as to what might happen. When the stochastics line up with the movements on the external, then you are making serious money. We get oversold, overbought very quickly these days. What we look to see is what are the stochastics. Let's look to see what are the stochastics on. This is the 15-minute, so these lines will move on faster. Overbought, oversold. Let's look to see what the stochastics are on the longer term picture, which spans all the way back to 2009. Okay, it's still very strong. It's overbought, certainly overbought, no question about it. And we're going to get a crushing 1,000, 2,000 point type of drop, in my opinion, by February, March of 2020. I've said that before. If you listen to my videos, it'll happen. Okay.
Okay. Yeah. It looks like it's oversold. I was wondering how you can tell when
I'm
it's
sorry.
going
It
to
looks
start.
like fix your mic a little bit. Looks like what?
It looks like it's oversold. I was wondering when it could start dropping.
It's overbought. That's what you say. It's overbought. We can clearly see it's overbought. And so your
Overbought.
question is, when will I just answered the question a few minutes ago. When these things start to go like this, it's going to happen in the time frame of February to March. Now, if you wait around for that, just the way the rest of the world is waiting around for it, it ain't going to happen. Overbought conditions, just keep in mind, ladies and gentlemen, okay? Overbought conditions can stay overbought for months and months and months. And in the meantime, if you sit around trying to short the market every 5 days, you're going to keep on losing money. Look, everybody wants the market to go down, but when the market does these type of things and they go down 3,000 points, no one buys. Am I right or wrong, Mark? Tell me if I'm right or wrong.
Yeah, that's right.
Exactly. I know it's right. Now, I'm a very straightforward guy, and people will attest to that. And I make my points very strongly, and I'm here to, I'll back up what I'm saying with facts. When we get oversold like this, these are generational buying opportunities. Okay, but nobody buys it there. We do. So just because something's overbought doesn't mean that it all of a sudden just going to crash and burn. It might take months because this is a monthly chart. This is a longer term chart. So don't we get 400 point type of drops? We just got that within the past 10 days. Those things will happen repeatedly. Apple will be down 5, markets will be down 300, take down the whole NASDAQ for a bit, and then boom, pick it up and run. Those are short-term volatility we have to get used to. We are used to, our charts show it, and we react to it. But as in an actual mini bear market developing, there are absolutely no signs. And why should there be? For what? We are cutting China deals, US economy strong, consumer spending. The only reason why markets get really overbought to the level where, and I've explained this earlier on, is when people go nuts on the market. There is not a single person who is happy about the markets. Forget about the ones who are sitting in cash, including the so-called smart money, $6.2 trillion sitting in cash. For what? Getting smashed in the bond market where the 10-year bond is going to hit 2%? That's when we get overbought. So if I'm reading it correctly, generally speaking, and again, just asking a question, Mark, you knew, you really haven't been that active with the markets, right? Like on the long side? And be truthful, it doesn't really matter.
Yeah, I was waiting till.
You're waiting for what? For just curious, because I hear this all the time. You're waiting for what?
The volatility that has been there for the last year to kind of level
Yeah,
out a little bit.
level out a little bit. Okay, so when the volatility went berserk, did you buy the market? No. You're a perfect candidate to join Clueless8Trading. We're not crazy bulls, Mark. Just remember that. We are tactical bulls. And when things like this are so clear to us, and we predicted this will happen, we don't sit around because the market doesn't do your bidding. You do the market's bidding. So what you have done is you have left so much money on the table, by not being involved in the market. You could have just traded the SPYs or Apple or any one of these big companies and made a ton of money. But by not making it, you have lost that money. So It's a mental calibration game. It doesn't come automatically. But if you join us and and we teach you, and then you practice it, and you see what we do, you will. I think your perspective of the markets will change. Markets don't do our bidding. Volatility is here to stay. Volatility is what you go to bed with, what you wake up with, what you trade with during the day, and it follows us around. These are machine-driven markets. And my members who are listening to this, they're like, oh, here we go again, because they hear it from me, and I've changed their mindset. I'm not Tony Robbins here, but embrace volatility. You don't embrace volatility, you're done. And by not making all those thousands of dollars, God knows how much you have left on the table, it's a tragedy. Next topic. And when you sit down for the complimentary sessions with me, I'll show you this. I'm not here to change your mind, Mark. You can be a dogmatic bear or you can be a dogmatic bull. That's not my business. My business is to help people make money. So let's talk about stocks here. So this is your short-term chart. Futures are up about 9. So far, so good. No problem. Absolutely no problem. 1 second. Not the 1 hour. We're looking at the 15 minutes. Every one of these moves here, in answer to your question, which was a very good one, good statement that you made, Mark, is volatility. From here to here was almost 400 points. And we were basically not actively trading this side. We were setting up trades because this was a pattern symmetry which we had detected from, and I showed it to my members, that the same thing had happened. And I don't think any other service has this type of chart. Nobody. And I will stand by that. Okay. Where we talk about predictive analytics. 1 second. I'm trying to get all the picture. Okay, just show you this picture. If you go through my Twitter feed, of course you have to scroll down a little bit. You'll see that I talked about a pattern symmetry. Jody follows us very carefully. So does Mike and Paul. So let's choose the pen color. I said what happened back between the 13th and 17th for about 4 or 5 days of November. It's the same stuff that's happening here between the 19th and the 24th. I showed the pattern symmetry, and I even wrote down here structure. I wrote down structure. I think I wrote down structural pattern symmetry. These are pattern symmetry that guys like us who are literally robots, when we look at charts, can identify. We shot up above that, we came down. Right here, most people who are waiting for whatever they're waiting for, okay, did nothing. And we were setting up trades, and bang, made a ton. Our SPY calls, not the first time, went up more than 200 to 300%. Okay, and the market is still moving higher. So these type of structural pattern symmetry, I don't expect somebody who's a novice in looking at charts, or I don't know, some people just don't get it, which is fine. Helps me explain, that's my job to show these type of things. Your job is to just get the messaging from it. And we're still going. We're still going. Now, we're going to hit this top by opening tomorrow, and then the market's going to possibly pull back a little bit. Does that change the structure of the bull market? No. And in between the SPY going up and down and the S&P, there are so many other stocks. The biotech index, which I talked about 3 months ago, broke out like a monster, and individual stocks, one of them got bought out for a huge premium. Medicines company, a couple of them are on the table, and a lot of them go up. So it's not just the SPYs, because, and I don't know what type of trader you are. We'll talk tomorrow. I'll get an idea and try to help you as much as possible. But individual stocks, reversal trades, like going up like 30, 40 bucks. Restoration Hardware bought it like after we saw the Buffett thing, up like 30 points from what I call people to buy it. And you're talking 10 days. Tiffany got bought out. Apple keeps on going. Always opportunities, always. Markets are just fine. The less people believe, the better for us. When the believers reach 80% and they really believe the market's going to go higher, we're going to short the market crap down. That's when real tops are formed. I'm not just saying this, I've seen it. And some of the smarter minds in the business will tell you that. All right. Throw in a stock there, Jody. We can take a look at it. Let's look at,
Disney.
which one?
DIS.
Disney?
Yeah,
Okay.
I've been buying it on trading on pullbacks.
Pullbacks. Okay. So Disney is good. I'm not trading Disney right now. I know we traded it very successfully. Disney is obviously a market barometer. So when I look at the daily chart on Disney, it's fine. It is absolutely fine. All the internals, look at the MACD. This is when I tell you the breadth of the market is expanding big time. Like, look at that. It's just like the shorts keep on like, oh, we're waiting for the next bear market. And the stocks that move the Dow Jones Industrial Average, like the Disneys of the world, are just going bonkers. So let's do a quick thing on Disney. So if somebody says, where do you think Disney's going to go? Because that's the standard question to ask. Then let me draw a line and say that Disney can, oops, let me put this out. And you guys, while you're listening to this, please throw me a couple of stocks that can show you what the projections are and what you can do. Disney, the major breakout in Disney came at 147. And Jody, this will be right up your alleyway. The range breakout was 126. What was the depth of the range on this multi-month range? 147 minus 146 is what?
About 21 points.
Yeah, so let's call it 21 points. Add 21 to 47. What does it come to?
168.
Thank you very much. The magic of technical analysis. Disney, in my opinion, max upside is, like you said, 168, right there. Yes, Paul, of course, I'm going to show Amazon. Our Amazon calls went from $1.42 to $11. All you had to do was hold it. Fasten your seatbelts. How many days did it take, Paul? 5 days. Think about it. You put $1,400, you take out 11,000. Did I do that? No. I took staggered profits along the way. But I'm just giving you a real life example. We called Amazon right off the lows, and we're going to talk about it. $11,000 on a $1,000 outlay or $1,400 outlay. Think about that for a minute. And that's not the first time we've done these type of things. We do it quite often. So 168 right there. So Paul, answer to your question, Disney's max upside is 168. In the meantime, upper Bollinger is 158. If I was keeping a close eye on the short-term trading stuff, I would basically take profits on any burp above towards 157, which is a lot. 7 points in Disney means the market is up another 300 points. But this is a bull flag, and a bull flag generally bulls up. So I say 158, 160 is going to be a short-term cap. Max upside, 168. Answer the question?
Yes.
And
Thank you.
this is very powerful. This range on Disney started in April on the first gap up on their earnings. Okay? And I'm not even that fond of trading Disney that much, but I'm just telling you how powerful this stock is. So, because they've changed their whole strategy, the streaming service, blah, 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 10 million people signing up in like one night, obviously. So, that was the first gap up. Then this was the second gap up. The range is the longer the base, the bigger the move. This base is long. It's 8 months as of today, December 1st. We just broke out. We can come back and test 147. Sure we can. The trend breaks if we close below 142. Oops, that's Tesla. There, okay? No, why is Tesla coming in the picture? Hold on. There you go. All right. So now it's overbought. There's no question about it because the standard deviation from the 50 and the 34-day moving average is quite significant, as you can tell. So a quick sharp pullback on Disney on whatever manipulative headline something comes out. Oh yeah, 2 people dropped out of signing up, like all that garbage that you hear to push the stock down. I would say that 147 retest is very likely from a trading perspective because this distance is quite a lot from the 34 and the 50-day moving average, i.e. standard deviation is probably now +6 or +5. That's pretty severely overbought. But so far, so good. Longer term picture, 168, 157. Amazon. Let's take a look at Amazon. Amazon, in my opinion, it's my opinion, obviously, is probably the most undervalued tech stock out there for different reasons. Okay? Political reasons, all kinds of stuff. So what do we do on Amazon? We don't sit here try to prognosticate like, oh, what's going to happen 3 months from now, because I have no freaking clue what's going to happen 3 months from now. We trade Amazon on a range basis. So let's look at the daily. And this has paid a lot of bills. Amazon's floor is pretty much the defined floor, unless something goes dramatically wrong with the company, is the floor it created at 1672. Back on June 3rd of this year. Okay? Went berserk over that. We played it on a staggered basis. Very happy. Came straight down, kind of. Created a trading band. And these trading bands are wide. That's why I like it, because you can trade these what is this trading band? 1850, 1770, let's say. That's 80 points. Come on. As a trader, we don't sit around waiting for perfection. We take the moment and try to make it perfect. That's 80 points. You can't trade 80 points. That's what we've been doing. Okay, what do you wait for? Some big breakout here that's going to take the stock back to 2100? Well, you're never going to catch it because it's never going to be in a straight line. So I love it when individual retail traders, no fault of their own because that's how they've been trained to think, say that, oh, I'm waiting around for this. Okay, waiting around for what? Okay, just trade the ranges. 1850, let's call it 1760. Okay, so let me clean this out. Let's draw a line. Very defined. Let's show the prices on the left. So Paul, 1745, 1856. What's the depth of this trading band? Which itself is a very profitable. If you trade it right, you're rich, which we did it very well. So 1857, rounding off the numbers, and 1745 is a depth of 112 points. Okay. Yeah, congratulations, Paul. You actually, great tip alert. Last I checked, Paul, I wasn't a waiter. I think waiters are the ones who get tips, right? Just kidding. That's an old joke. But yeah, I'm glad that you participated in it. All right. So the only time that I was a waiter was when I did some part-time summer jobs in college in some fancy restaurant, and I had some great gift of the gab, and I got a lot of tips, which was great. So let's do this. So we got 112 points, ladies and gentlemen. 1, 1, 2. You buy the lower end of the band at the 1725 level or thereabouts. And then those calls that we called here for people to buy, please check on the Twitter feed, all there, which was around 1713, 1740. I said buy the 1800, 1820. So somebody who's not used to my tactical way of trading saying, why is this guy saying to buy 1800 when the stock is at 1737. And we saw in my other platform, the quad platform, what was going on. It was a falling wedge pattern. So I'm buying 80 bucks out of the money. That's why we paid $1.42. Otherwise, if you want to buy in the money, you'd pay $16 to $20. Do you really want to pay $2,000 for one call? And the stock goes up and you maybe doubled your money? How about buying 10 at $1.42 and deploy $1,400? Because that's what my traders do. Or buy one. Okay? $1,420. Right around here. We noticed the internals were starting to turn. The negativity was hitting the stock big time. This is a daily chart. And this is actually very bullish, Paul. If we continue with these histogram expansions for a couple more days, this stock will attempt to break out over 1850. It might even do that tomorrow based on some, isn't Black Monday sales, right? Black Monday, Cyber Monday. What if Amazon sales it go to the roof and they print a number? The stock will gap open 30 bucks. That's what it normally does, right? So is it not a possibility where the stock closed at 1800 on Friday? Because Friday was options expiration, weekly options expiration. They're going to not run the stock up for weekly options expiration and pay the latecomers money. Come on. You think option makers and the robots are in the business of giving you free money? No. That's why they pinned the strike at 1800. Okay, so we were buying here. Wasn't feeling good. We originally told people to buy here. As it went up to like $2 and change. I'm like, oh wow, we're up 60%. Boom, it came down back to that same level again. We bought more. Paul's a living testament of that. Stuck with it. So it went from $1.42 to more than $11. How many days did it take? 1, 2, 3, 4. Can you handle 1,000%? Let's see, less than 1,000%. What am I saying? 11 divided by $1.42 to be exact is net 774%. That means your net ROI, well, it went up 770%. And your net profits would be 670%, right? Exactly. 770% in 1, 2, 3, 4. Can you handle that? Well, the first time we've done that. We did that in Tesla. We did that on Roku. We did that. Apple doesn't do that kind of stuff, by the way, unless you hold it for multiple days. We did that in ServiceNow. We did that on many other plays, which are big time reversal plays or earnings gainers, obviously. 770%. So let's look to see what might happen. Remember, it's not where it's coming from, it's where it's going. Do we all agree on that? Exactly. I don't care if you guys agree or not. It's not about where you're coming from in life or in trading. It's where you're going. So, okay, you weren't there because you weren't with Clueless8Trading. You didn't get these alerts. You know, they were all pissing on Amazon, blah, blah, blah. And in the meantime, it goes up 770%. Okay, we called it. So now I'm looking at a top end of 1856. So if you want to see how to trade the stock, you might want to trade it for 50 points. So where would you buy the calls? You can buy whatever you want. You can pay $16 for a call, $17 for a call. I would buy the 1850 to 1860. Because there is a possibility based on the internal, based on the holiday season, based on the numbers they'll be posting on online sales, that the stock breaks out. So if it really breaks out, where is it going? It's going to 1950. 1950. It's going up 100 points. You don't think that's going to happen? It might happen? Well, watch and see. And if it pulls back, the level that you want the stock to hold is the 50-day moving average at 1761, which is roughly about 30. They closed at 1798.61. Yeah, roughly about 30 points. 35 points. Okay? This is what we wanted to hold. This was the downtrend line. Multi-month downtrend line. We broke out of it. You want to hold it. So holding meaning that you wanted a 34-day moving average, 1772. You really don't want the stock to go below 1765, which is roughly 30 points from where it closed right now. Do I think there's a good possibility the stock hits 1850? Yes, I do. And that is major resistance. Hey, look, I'm a pretty simple guy. You know, every penny that we make as a trader, I'm a professional trader. I pay, this is what my living is. Okay, I'm not a trust fund baby. I'm grateful for it. So if you guys don't think 40 bucks is good enough for you and your options go up, more than a double is not good enough for you, well, hey, maybe you join the billionaire camp. Well, you don't become a billionaire by not making the right steps, right? Exactly. So I don't know what some retail traders blow my mind. They're like, oh, whoa, let's see when the market goes up, we'll buy that. I'm like, what are these guys thinking about? Either they are so super rich that they don't even care, and every trading money is a few dollar, okay? Mine is not. So I don't get it. To me, 10, 20, 30 points back and forth, trade it. That's why you're known as a trader or an investor for that matter. It looks good so far. This is a red candle. That was primarily because of options expiration. And let's see, if it breaches 1850, the stock's going to move real fast, real fast. Amazon doesn't sit around. It goes real fast. Okay. Let me show you a stock that's probably going to get bought out in the next couple of months. Guidant Health. I'll be talking about it. We've been making some money on it, but nothing really substantial lately. Okay. We bought the stock originally around 60. The stock hit 84. No, first it hit around 70, then pulled back. 3 days of pullback. I remember getting a DM from one of our very loyal clients who joined us many, many years ago. And we're not that old compared to other services. We only started in April of 2014. So it's been 5 years. Maybe more than 5 years, right? We're not around for like 20 years or so. We're the new boys in town. So he's like, hey, you know what happened? Yes, nothing. Nothing happened because technically it's unless the stock breaches 60 again, I'm fine. It never did. So he bought it more. And the stock went to 84, 80. And now it's doing this. This, ladies and gentlemen, is a very powerful formation. Do the due diligence on this company. Do diligence on the company. Guidant Health. Unbelievable stuff. And then the solid write-up. It's always good to get write-ups from, on CNBC, on one of these top traders or analysts. This, to me, is a bull flag. A double bottom at 60. I believe the stock, which was at 110, we bought this stock, by the way, when it first came IPO. When did it first come IPO? In December of 2018. I remember telling people, buy it. The stock went berserk. It went from 40 to 110 within 2 months. 2 months. Stayed around there. And then this is the Bernie Sanders attack on healthcare and President Trump attacking healthcare companies too. They both did, right? Except the final bill that was passed in controlling drug prices and stuff and transparency of hospitals, at least from President Trump, was actually very sector friendly, which was great. But the sector was very scared. This is when the biotechs went down. So just look at this, 110. Here's your uptrend channel. As a trader, you're looking at 90. That's a very nice sum of money, guys. It's at 77. And I believe that the stock will hit at this level and possibly go to 110. If they get bought out, they're going to get bought out at 110 plus. So what's the big deal? It's just got to be tactically orientated and less emotional. What's the lower end of this range if it comes down? 72. Am I going to freak out and say, oh my God, it went down to 72. It closed at 77, 78 on Friday. No, as long as the uptrend channel is intact. But it's a biotech. Something else happens. But from a technical standpoint, 72 is my floor. 70 is my floor. Otherwise, I'm looking to sell it around 85. And if I see and probably buy some calls further out at 95 strikes going into January. What calls are we trading right now? We're trading the January 20th 80 calls, which will only cost you less than $3. Can you handle the heat? Boeing, last stock I'm going to show you because this is a major market mover. We've been trading Boeing very successfully. I think out of, and I do have the records of that, out of this 18 times we have traded Boeing, we have won almost 14 times and we have lost 4 times. My track record in Boeing is superb. Okay? Boeing, in my opinion, and of course this is the unstructured chart. My Boeing charts are on my Twitter feed. Is a very defined floor. I don't care what the FAA says. I don't care what some analyst says. I don't care what you guys think. This chart looks okay to me. Yes, it's trading within a range. That range is 360, 358, 380. My other charts are more specific about the ranges. So nothing wrong with this picture. But some days it'll be down $4, some days it'll be up $7. It's a very news-driven stock. Very news-driven stock. So I'm showing you just back of the napkin type of calculation right there. There it is. The 50-day moving average is 364. When Boeing was down here, we were telling people to buy it. Okay, that day, 330, a little past 320. The reversal hammer reversal. All kinds of stuff. Everybody's so negative on Boeing, like, oh my God, you get into any Boeing, it's going to crash like garbage. Okay? I said buy. The stock went from 320, 330, well, more from around 330 when I told people to buy it, to 370 in a matter of days. So now it's creating a quick pullback, which is fine with me. I told people we would at least kiss the back end of the 50-day moving average. That's exactly what it did, the red line. We broke out. I would have loved to seen it go to 390, but there was a lot of congestion here on a supply side, meaning there was a lot of selling pressure from October at here, and that's exactly where Boeing found major resistance. So it's another stock. You buy some long-dated calls with higher strike prices or short-dated calls going week by week with strike prices closer to where, not necessarily in the money, but close to the money, near the money, and you'll be fine. That's it, guys. We have a busy week coming up. Futures are up 950. Let's take a look at the E-minis. Be selective. Be scared of the market. Sure, I'm scared of the market all the time. But my scare is more of like a positive energy. I need to be on my toes. I'm not hiding in a bunker, buying cartons of diapers from Costco and always thinking, oh my God, when will it all end? Gentlemen, the bull market's not ending anytime soon. And we will be the first ones at Clueless8Trading to give you the markers that there is some substantial damage, which sometimes it felt like in the past year and earlier on this year, but no longer. Those were functions of the credit market, major recessionary inverted yield curves, massive hostility on the US-China trade war side, massive negative interest rates on the credit side globally, fears that the US might fall into a negative interest rate environment, i.e. the inverted yield curve. And now the yield curve is steepening. That's the first canary in the coal mine telling you it's okay, start breathing. Because the credit markets are what determines the fate of the stock markets, ladies and gentlemen. Wake up and learn. Hashtag time to grow up. Don't be overtly bullish. Don't be certainly overtly bearish. And I like the fact that most people are. That means a lot of cash on the sidelines, and every time the market go up, you get the monster kick in the butt short squeeze. And who doesn't like it? We do, because we're normally set up prior to that. So this is a very powerful chart on the daily. If we break out over the upper channel, that's roughly around 31, I'm trying to fix this, 31.69 on the E-minis. It's going to be, I don't know, it's going to be literally like, I don't know what word to use. I mean, these dogmatic bears, the Two Sigma funds and all these other short funds, I don't know what they're doing. I know they keep on spewing the hate and the U.S. economy is going to hell in the handbasket, blah, 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 just to get their books up. But they fail. So major resistance at 31.71 on the upper channel. You can still make some decent money. And if we break out over that, it's going to be like this. 3,200. Easy. That's all, guys. Mark, I'll talk to you tomorrow. Don't have nightmares. Market's still going higher, okay? And I don't care about the market that much. Our stocks, selective ones, it doesn't matter what the markets do on certain days. There's always some green stocks in our book that we're trading that's going to make you a lot of money. The United States of America is just fine, but we do need to get some sort of positive resolution on the US-China trade talks. Have a great evening. Thank you for attending. Happy holidays. And God bless you all. Spread the Clueless8 Trading word, guys. Any type of market, highly volatile, non-volatile, it's always volatile. Bad days, ugly days, very good days. I'm there with the guidance, and then you guys pick and choose what you want to do. We never walk away from anything. And every alert and all the whole market and individual stocks are depicted in the form of visual charts. The more you understand the charts, the better off you'll do. Mix in your trade management, you're going to be fine. Have a great evening. Thank you, guys.